Hey traders, this is Wrist. I just want to give an short sort of lesson on looking at candles. As many of you know, a lot of you probably also use different candles for different signals, And typically, a lot of strategies base themselves around looking for areas of exhaustion, looking for areas of potential overbought, oversold, looking at levels, looking at maybe swing patterns, like if we take a look at this move and then imagine that it's going to kind of replicate that move. And so then it becomes as to what price does during certain levels. And that is very important when we start talking about looking at different charts, hours versus 4 hour versus daily versus weekly. And to some extent, those arbitrary cutoff points. And for some of those charts, it is important. People do look at the hour charts. People do look at the daily charts, and beyond that, it can get a little tricky because any other application beyond two will have different starting points, versus there are always going to be hours in the day. So, for instance, if you set it at 4 hour chart, does the 4 hour timer start at the open session on the US? Does it start at midnight? Etc. like that. So that can affect your bars. And also, if you look at tick charts, a lot of tick data between brokers is different. And one of my favorite tick data streams is actually the Thinkorswim 2S. I'm not sure. I'm trying to remember their company, like their actual company. I always just call it TOS. Trades? No, that's another one. But anyway, but even with that, you have to set a tick number. And some people might get hung up on a magic tick number. But the truth of the matter is there is not a magic tick number. They just show you the flow of price. So here I have two charts on the euro dollar. And this would also apply if you're looking at like 5 versus 15 to some regard. But they are off by, so this is a 133, this is a 136 on the right. It doesn't show it, but it is. Now say I was looking for just a very simple, like, okay, I want to see drops in the stochastics. And after it drops in the stochastics, I want to look for weakness or strength, or whatever. And so you might get down here, and here they're pretty well proportioned. I mean, we both have some good reversal candles and almost, even Stevens in that regard, But that's not always true about all of the candles. The stochastics get a little sloppier right here, but I mean, they're both equally sloppy to me, like this little area right here. And they're going to show themselves a little differently. Now, the larger the tick number, of course, the less impact one or two ticks is going to make. But if you're looking at like I guess your scalping charts or something, or trying to look deep down in the price flow to hone your entries, then these one or two ticks are going to make a difference. And so you have to take that into consideration, when you're potentially looking for reversal candles. So for instance here, where if we were in a oversold region, it's like, okay, look, we have a nice downward trend. I mean, you don't even have to draw these trends really. I mean, you can just kind of see that they're doing what they're doing. And if they're not, they're not. It doesn't really matter. And it's like, okay, I want to sell somewhere in here. We start getting into here. And you'll see these stochastics start to roll over eventually, I really like Thinkorswims. They're so, I don't know, smooth in my opinion. But if you look at the right side, this is the 136 chart. You don't really get a good reversal candle, Don't get like I'm sorry, right here, a good point, a good entry point, It's like you see the slope, you're like, oh man, this is really good. I want to get in. Well, if you look on the other side, bam, hammer. It tells you where to get in right there. You get in, stop, and take whatever proportion. Of course, this is scalping, so this is a lot lower. It looks like we have 17. Looks like you get in at 28 and it goes down to 17, and you can proportion at 1 to 2, right? I mean, it's just a pretty simple Now this is not like a trading strategy. This is just an aspect of entries that I'm sort of going over here. And so the take-home message is that always take, when people say like a magic time with a magic candle, for a grain of salt, because it's always different. And the price action is going to be the price action. It doesn't care about when a 5-minute candle closes. It doesn't care about when the 15 window closes. And you can take a window and slider and you'll get all sorts of candles if you took a 5-minute window and moved it up and down like by the second. So then you ask yourself, okay, well, what good are these candles then if they don't mean anything in a specific charting context? Well, they're still good because they will occasionally show you proper price action. And more than that, the price action is there. Like in these dojis, we're seeing price action piddle around, right? Sometimes it might be hidden in candles, and sometimes it's not. So it is important to like switch through and look at different time frames to get that. Anyway, I hope this video helps you develop your own strategies and helps you avoid some of the pitfalls. If you have any questions or comments, or if you disagree with me, feel free to let me know.